Hello, I'm Alec Hogg, and welcome to our Biznews Share portfolio update for the month of June. We've got a little bit of action going on here. As you see, we are selling Sasol. I only bought it 2 months ago. That's hardly Warren Buffett's way of doing investing, but I'll explain in some detail a little later. We're also selling Richemont, which we also didn't buy that long ago. There'll be more information on that coming up. But before we go any further, my colleague Stuart Lohman, the general manager at Biznews, is behind the scenes making sure that everything works the way it should, and he'll give us the go ahead after you've told him that you can actually hear us. Stu?
Excellent, thanks Alec. Always good to be here. Good monthly update on the portfolio. It never ceases to not surprise on the upside, thankfully. Yes, before we get going, if you can see our two pretty faces or not so, and hear my voice and see Alec's presentation underneath, can you give us a high five? I see there's a few coming through. Can I see a few more just so that I am sure? And if the sound's a bit low, can you just let us know? You can put that into the questions bar as well, just if it is a bit low, so we can adjust the levels on our side on that. And we do want to keep it conversational as always, so we will take questions as per usual on the questions drop down on the control panel. But we are wanting to try the mic open thing. So if you do want to let us hear your voice and add something different to the presentation, please just ask the question and in there just say mic open please. And then I'm going to try open the mics on our side and let's see how it goes. Because it could be quite a nice different feel to the thing. But Alec, it looks like we are good to go from your,
Sorry, Stu, and also the camera maybe. Because surely we can open both. If you're making the questioner the panelist, maybe we can get the camera open too. So if you don't want the camera open, no problem. If you're still in your pajamas and it is midday, but it's lockdown, so whatever, we all work from home. David Shapiro yesterday in our Rational Radio webinar was saying that he was wearing his slippers. And I didn't ask him to stand up because he might not have been wearing appropriate undergarments as well. But it's no judgment. If you want to switch on your camera, sure, it'll do that as well. Anyway, so the idea here is let's try and get it as interactive as possible. I'll be with you for no more than an hour, I promise you. It appears always when we do this update that there's so much to talk about and so many questions that we need to have answered. But this month, we've got a couple of really interesting changes, and unfortunately, not yet any new purchases with the stocks that we've pushed out. But I'll give you that insight right now. Okay, so let's get into the portfolio. Take my pretty face off the. I'm putting the wrong thing around. Apologies. There we go. So, as you can see from the headline, we're selling Sasol and Richemont. I'd like to just give you a little bit of an update of where the portfolio stands at the moment. It's been another phenomenal month. Last month, it was almost incredible to think that we'd gone up to 8.7 million. This month, a month later, we're at nearly 10 million rands. And that is after the rand is actually appreciated. I want you to just have a look at this portfolio and see where the growth has come from. If you look down the percentage rise in ZAR in rand terms, you'll see that Amazon is our number one performer. It's a quarter of the portfolio, and it's been a fabulous performer and continues to do so. However, in the past couple of months, in fact, since COVID-19 struck, Sasol has been extraordinary, 119% gain, and that has been a big part of the improvement. An investment of 160,000 in March. If you recall, in March, the share price of Sasol was 27 Rand. We put most of the investment, it was a 3-to-1 split of the cash that we realized there from an exchange traded fund that we sold. We put most of that into Discovery at 67 Rand. But Sasol at the time, there were many people thinking that it would actually go into insolvency. We didn't think that that was likely. And as a consequence, we bought them at 27 Rand a share, thinking that it was almost a historic low that you'd be able to buy the stock at. It went as low as 20 Rand and 60 cents a share. Now, the purchase of Sasol was fortuitous for us because I had been talking about the opportunity to buy into Sasol for a month before. And what we decided to do with that purchase of both Discovery and Sasol was to make the full switch on that day, on the 24th of March. It's worked out really well for us. Discovery has put on 63%, which makes it one of the top performers as well if you look at the US dollar returns. And put that next to something like Adobe, which we've held for almost for 2 years now. And that's been a fantastic performer with 76% from Adobe. And yet Discovery in US dollars has almost matched that performance. So it's been really good run by the two stocks that we picked up, and away we go into the future. I like putting this up here for two reasons. First of all, because up until this point, as I wrote in the Daily Insider newsletter this morning, in fact, Stu, you know, it might be an idea. I'm sure there might be some people who aren't getting the Daily Insider. Won't you just put in the little box down the bottom, in the chat box, the link for anybody who's not getting our daily newsletter so they can sign up for it. Stuart's very good at these. Yeah, it's links and all kinds of things there. So just keep having a watch at that as we go through the presentation. But as you can see, we started on the 5th of December 2014, at which time the Rand was 11 Rand 27. Very briefly, what happened at that point was that we believed that South Africa was going in the wrong direction economically. We felt the Rand was going to fall out of bed, and we believed that South Africans needed to diversify their investments offshore to protect themselves from the likely problems that were going to occur in the country. Reason for that was something called Zoomonomics, and well, we know the consequence of that. So let's just put that in the back burner. The idea was take money offshore, let's invest it, instead of just putting into dollars, let's invest it into equities. Let's try and find the right equities. And then I relied on my own experience, which is in the digital media field, to try and see whether there were companies, exponential companies, that we could invest in. We duly did a bunch of them, and I'll actually show you the ones that we sold. A little embarrassing to have sold Tesla at $300 and it's now $1,000, but that has really worked out pretty well for us. We started with a portfolio of $200,000. Santabank Web Trader has been our sponsor right from the word go. So I hope that, I know they've got more than 10,000 people now who are investing via Web Trader. So it seems to have worked for both parties. And as you can see, the improvement over this period has had an annual compound growth rate of 20.7% in US dollars and 30.7% in Rand, which tells you the annual depreciation compounded of the Rand since 2014 has been 10% a year. I've changed this. You might have remembered that last month and in previous months, we were putting figures there which just got ridiculous. In fact, if I'd continued on the calculation that we've been using in the past, which was very simple, I took the portfolio as a whole, took the starting date at 2254 or 2.254 million Rand, and took the current portfolio value, as you know, is just under 10 million Rand, and then divided it by the number of months that the portfolio had been operating for, which at the moment is 67 months. And then you come out with today a return of 67% a year, which is crazy. So instead of that, to get a better reflection, I put that into the Excel calculation of compound annual growth, and that's far more reflective, because if you grow a base by 20% in year one, you start at 100, by the end of year one, you got 120, and then you got that extra 20 that is going to grow from there. Clearly, you can't just keep using the base of 100. You've got to now use a base of 120 for year two, and so on. that's what we've done through annual compound annual growth rate. And as you can see, that's what the numbers look like, 20.7%. Now, I wanted to put this here, as I mentioned in the Daily Insider this morning, just to give you an understanding of how amazing Warren Buffett is, because he has since 1965 achieved compound annual growth rate in Berkshire Hathaway of 20.3%. Isn't that amazing? We have had 5.5 years of outlandish performance in this portfolio, and we've managed to achieve just over 20%. He's done it since 1965. So when people tell you that Warren Buffett is the Oracle of Omaha, when you hear me saying that we've got to listen to what the OBOS says, it's based on very, very strong fundamentals. And that shows you the power of compounding when you are a superb investor like he is. We've done it for 5 years, and please God, it continues. But really, for me, when you look at the way our portfolio has performed, you've got to believe that it's to continue at this rate, you just got to get real lucky. Whereas Buffett is just pure skill, and he's been doing this now for, well, over 50 years, 54 years. But the other thing that this table shows us is the power of compound growth, because Buffett's Berkshire Hathaway has grown by double the rate of the S&P 500 index, but the growth in $1,000 in the S&P 500 index over those 54 years has gone to 19,784%, whereas Buffett's portfolio, given compound, is 2.7 million%. So I love going back to the Oracle's view on things. That's why I wrote a book on Buffett, or how to invest like Warren Buffett, because he is so easy to understand. And one of the big things that he says is that the eighth wonder in the world is the power of compound interest. And if you go back to that, our value, our Rand value of this portfolio, from just over, or 2.25 million Rand, through the power of compound interest of 30%, when you're growing at that rate, has taken us to nearly 10 million Rand in 6 years. Extraordinary. Okay, so the individual stock performances in our portfolio today, as you can see there, Sasol, which we only bought a little while ago, 27 Rand, because of that extraordinary performance, is the second best performing share in the portfolio. And the rest of them, Microsoft broke above $200 a share last night, so that's quite a nice milestone to look at. Amazon, I've told you time and again, we've, in these webinars over the last 5.5 years, we've had people saying, isn't it time to take profit? You don't take profit unless the company that you've invested in, you no longer want to be a co-owner of. And in Amazon's case, we are co-owners, and we're going to continue to be co-owners there pretty much indefinitely. Well, certainly as long as we can. Then if we go further down, Microsoft, Apple, Adobe has been a great performer. Netflix has been a great performer. But look at those three that come next: Discovery, Spotify, and Cloudflare. Absolutely extraordinary. Discovery, we really did get very lucky by being able to buy it at 67 Rand in March, when everybody else, or many, not everybody else, but many were panicking. I hope that you followed us in that purchase. Also with Spotify and Cloudflare, which we in fact bought over a period of 3 months during this COVID period, and both of those have already now put on 50%. Now, there could be a dark side to that, which is the day traders, which I'm going to talk about in a moment. Naspers has done really well for us as well, and that is, of course, linked to what happens at 10 cents. So we're happy to stay with that one. There's the individual performances. As you see, the good fortune of investing in Amazon in 2014 at $328 a share has really pulled the portfolio to where it is today. But it is a company that, to my mind, has just got an irresistible business model. And it's not just my mind. The OBOS himself, Warren Buffett, says the same thing when he's quizzed about Amazon at Berkshire Hathaway meetings. He talks very, very highly about Jeff Bezos and the way that he's build his business model. Incidentally, I was reading a book recently by the co-founder, in fact, the first CEO of Netflix, who spoke about Amazon trying to buy or making an offer to buy Netflix in the very early days of both companies. And Netflix realized that even at that stage, that Amazon was such a powerful organization. This is Reed Hastings of Netflix, that they gave up 95% of their business at that stage was in actually selling DVDs. They gave that up because they knew that Amazon were going to be selling DVDs, and they then went more aggressively into the rental market. But it just shows, I'm sure Reed Hastings bought a huge or bought a lot of Amazon shares, and today would have benefited from it. Something else about Amazon, if you are interested in this kind of thing, in history of companies, Jim Collins, who wrote Good to Great and Built to Last, two, well, I suppose, foundation books for anybody who's interested in business and investing. He was interviewed on a podcast by the owner of Farnham Street. You can go online and just look for that podcast. It's a brilliant interview, about 2.5 hours. It goes on a while, but within that interview, Jim Collins speaks about visiting with Amazon.com soon after his first books were published, and the way that Bezos took the ideas that Collins had given and then applied them into the Amazon story, specifically in the what they call the flywheel, which is something that Colin spoke a lot about. We have one at Biznews, and many of these successful companies work on a flywheel, and they really it just puts in an image what exactly the group should be focusing on. And that flywheel of Amazon, which was adapted from what Collins was talking about, is spinning faster and faster, as you can see. So what have we done today? We have sold Sasol and Richemont. First of all, let's start with Richemont. Richemont's been a disappointing performer for us, but in the context of COVID-19, not so much so. The reason why we're selling here is because Johan Rupert is telling us, if you like, that the company has got 3 rough years ahead of it. Remembering that Richemont is in the luxury goods area. The reason we bought into Richemont was because they were moving nicely into the online space with some very attractive deals that they'd done both in Europe and then the partnership with Alibaba. But when you read through what Rupert had to say recently both in the financial results, and by the way, the financial results from Richemont were pretty ordinary. Profits down 69%, dividend cut by half. There's nothing wrong with the business. The business is in good shape. The environment around it has really transformed. And we are seeing all over the world this drive towards a more equal system, fighting inequality. And when you have a sea change like that, you've just got to know that those at the top end, the wealthy, aren't going to be going in for conspicuous consumption to the degree that they did in the past. And that's pretty much where Richemont plays. Very expensive watches, very expensive jewelry. And Rupert himself said to us that he expects the world is going to have 3 tough years. Richemont has got big cash reserves, but that still isn't going to protect it from the environment that it's going into. So it's not a growth story for us anymore. When you're trying to protect a 30% compound annual growth rate, you got to look for businesses that are going to be growing into the future, and that's not the case with Richemont. Sasol. At 27 Rand, it was a screaming buy. At 140 Rand, not so much. Most of the analysts in South Africa say that Sasol's probably fairly priced at around 70 Rand. So what's it doing at 140? Well, yesterday on the Rational Radio webinar, and what we've done there is the Rational Radio broadcast, which we have as a podcast, and it's on Mondays at noon. We moved it across to a webinar for Biznews Premium subscribers only because we wanted to give the opportunity for all of the questions that were being asked to actually being addressed. That's the first thing. And secondly, to make it more interactive, like this webinar is now. So in yesterday's Rational Radio webinar, we spoke to, we had a few people on there who really opened my eyes, and I'm sure will open your eyes as well, to what's been going on in the United States. When people were sent home for the lockdown, many of them got bored and watched Netflix and subscribed to Spotify, which we're happy about, and listened to podcasts because we have them in our portfolio. But they also started day trading. And the day traders have had a rip-roaring time. And as you can see by this graph, at the bottom, those are the volumes in the Sasol ADR. So if you're going to trade Sasol as an American, you're going to buy these depository receipts, American depository receipts, which are listed on the New York Stock Exchange. And if you have a look at what's happened to the volumes in the Sasol ADRs in the post-mid-March period, you'll see that they make the previous volumes look very, very small. It's not that the previous volumes were very small, but in fact, it's just gone absolutely nuts and ballistic. Now, there was a really good story in the Sunday Times over the weekend, which got us picking up and having a look at this from a different perspective. And I have tracked here the Brent crude oil price, that's the blue one, against the Sasol ADR share price. So ADRs are, it's like shares that are listed on the New York Stock Exchange, but it's a derivative. So when you buy the shares or the ADRs there, you have to fulfill it through actual shares listed on the JSE. So you can't, all of these day traders who are now going in and buying stocks like this, as you can see on the 1 week, it went with more than 100 million in Sasol's stock. David Shapiro has calculated that it's something like 15% of the equity of this company has traded since March. And who's been doing the trading and who's been doing the buying and that uplift in the share price that you see there? Well, it's primarily day traders from the United States. So you see those huge volumes in the US, and they come through to South Africa as well. There's a similar story in a number of the other stocks, many that we hold, no doubt, which are also exciting day traders in America. Many of them millennials who've never really bought into shares before, but are seeing this as quite a lot of fun. In fact, their standard bearer is a guy called Portnoy from a website called Barstool Sports, and it is what it suggests. The guys do some fantastic YouTube videos and so on, but it's really casual. They're having a lot of fun. They're having a punt here and there, and now they're punting on shares. Now that's fine if you're having a bit of fun, but if it's a big part of your portfolio, be careful, because what goes up in this way is likely to come down as well. I'm sure there's some who are looking at this graph and saying, but hang on, the blue line, which is the Brent crude oil price, is improving, so why shouldn't Sasol follow it higher? That is true, excepting that Sasol made an awful blunder when it built a chemical plant in the United States. It's been putting out some good news recently about the chemical plant coming on stream, but the problem is it overpaid massively for the creation of this plant and has landed itself with lots and lots of debt. Sasol has got big issues. That's why the investment analysts reckon it's probably worth more like 70 Rand a share than 140 Rand a share. But if it was worth 70 Rand a share at 27, it was a bargain. So our view is that Sasol we've been given a bonus. We've been given a big opportunity to cash in our chips at this point. The risk is now too high at 140 Rand a share. And as a consequence, we've sold out of Sasol in its entirety, as well as Richemont. I hope that makes a lot of sense. So here is where we are sitting today with the portfolio, having sold out of Sasol and sold out of Richemont. As you can see at the bottom, suddenly we have 13% of the portfolio in cash. What we're going to do with that 13% is going to be quite fun. Next month in the update, I have got already 3 stocks I'm very, very keen on. There's one, in fact, was in Business Day this morning with its financial results, called Storage. If you have a look around the world, many of these storage facilities are extremely good companies. There's big demand for it. and people, instead of selling, putting stuff into storage. The storage companies have done well. I haven't had a chance to read through Store Age to the degree that I'm completely comfortable with, but that's a stock that I'll be looking at in the next month. Very keen on two construction company shares, Wilson Bailey Homes, which is the last man standing in that industry, and Afrimat, which is a massive construction materials company. Both of those are brilliantly positioned for an upturn in the construction sector, which is what President Ramaphosa has been promising us. If South Africa is to turn around, there's no doubt that that's what needs to happen. There needs to be huge investments into construction. And that's the reason why both of those stocks are going to be brought into the portfolio next month. And then I'm having a look at a couple of others. Rico Frederick yesterday. Rico is the small caps specialist at Denker Capital, reckoned that Combined Motor Holdings, CMH, is just dirt cheap right now. I'm also quite keen on First Rand, which is a brilliantly managed bank. It could be an opportunity, as of course Standard Bank could be an opportunity, but nothing has yet been decided. That is for next month. But for the moment, we're sitting with 13% in cash, and we will be deploying that cash resource in the near future. Just so that you don't think that our changes in the portfolio have either been very active or have all been fantastic. I pulled this out. These are the companies in 6 years almost, or 5.5 years, that we have traded or traded out of. Only 10 companies in 5.5 years. So it's like 2 a year. Because this portfolio's idea is you buy and hold. Buy and hold, and then ride your winners. But as you can see here, we were very fortunate to sell Barclays, IBM, and Metrobank. Novo Nordisk, which we got out of in 2016, 4 years ago almost, has underperformed the portfolio, so no problems there. Facebook, maybe in line with the portfolio's performance, as is Alphabet. Berkshire Hathaway, which we sold in March to redeploy the money into Spotify and Cloudflare. As you can see, as you did see from the portfolio, Spotify and Cloudflare are both up 50%. Berkshire Hathaway is 1% higher. So clearly, at this point anyway, that sale and that move into those two new stocks have really played out well for us. The one that hasn't is Tesla. That's up 294% from where we sold. We did make a profit on Tesla, but I was very worried at the time that Elon Musk seemed to be going a little bit wonky. I guess all geniuses and disruptors do that from time to time, but it didn't look like things were going in Tesla's way. The day traders feel completely different, and in the same way as the day traders have been playing with Sasol, they've been playing with Tesla as well. And there you can see Sasol, 27 Rand to 140 Rand. We have sold out of that this time round. Some of the fortunate positions, Barclays was a scandal, IBM was following Warren Buffett, and Metrobank was a scandal. So we got out of those three through reasons that Buffett says is always a good reason to sell. And before we go to the questions, very briefly to pick up on those two stocks that we bought over a 3-month period. Sometimes you look back on it and you think, my goodness, how much better it would have been if we'd actually bought them all at the time. In other words, made our full investment at the time that we bought into Sasol and Discovery, which was in March. But the reason we do it differently in the United States is because you're bringing in a currency issue as well. So you've got the Rand currency fluctuation, and you've got the share price fluctuation. So to minimize the risk there, we buy those over 3 months. And Spotify, the average price that we've now purchased in is $148. It is concerning when you look on the right-hand side at those huge volumes, a little bit like the Sasol picture. So please don't panic if you see this share price coming down from its current level of over 230. Already it's put on 59%. That's unrealistic that it can continue like that. But the fundamentals of this company are sparkling, whereas the fundamentals of Sasol are not. Sasol's fundamentals are problematic. We have a world which is moving towards ESG investment, environmental, social, and governance. BlackRock, the biggest asset manager in the world, its assets under management are 20 times the size of the South African GDP. So it just kind of puts it in perspective. BlackRock has put it out there that they're going to be taking their investments. They're about, I think it's about $100 billion at the moment in ESG qualifying stocks. They're taking that, the immediate target is to take that to $1 trillion. So the likes of Sasol are going to come under pressure from ESG investors. Remember, Sasol is a big polluter. Together with Eskom, they make up 80% of the pollution in South Africa, and it's producing petrol and diesel, which is not really got a great future when you think of the move towards electric vehicles and the concerns about the pollution from motor vehicles generally, and the move towards sharing of vehicles as well. And now it's also in chemicals in a big way, which is also not exactly a sweet spot for ESG investors. So Sasol history's in the wrong side, and I'm quite happy that the day traders gave us an opportunity to sell there at a huge profit. But when it comes to Spotify, even though the share price might have been artificially boosted by day traders, I think even at these current levels, when we look back in 5 years' time, is going to be one that we'd be happy to be invested in. Reason here, they've taken a big bet on podcasts. We're doing the same at Biznews, as you might have seen in our recent announcements. And Daniel Ek, the not yet 40 Swede who's been running this company, it reminds one so much of a Steve Jobs, a younger Steve Jobs. So incredible performance there. And then here's another guy, Matthew Prince, who runs Cloudflare. Cloudflare hasn't really been a day trader favorite. It's a little bit off their radar. But why Cloudflare has been doing so well is because it really just is fantastically well positioned for the new world. Cloudflare is the global leader in internet website security, a subject that we've got to know about quite a lot at Biznews, because from time to time we do have people who don't like us who want to bring our site down. And as you can see there too, the average purchase price is at $24. I think our first purchase was at $16, and it's now north of, yesterday it closed $37 a share. So this is a stock that it might have a bit of day trader interest. As you see, the volumes are high, but it's more like people are now discovering the opportunity in this incredible business. Okay, Stu, is anybody that I see there's a number of questions, and we can get into those now. Has anybody wanted to open their microphone?
No, we've got no mic requests yet, Alec. Just a few questions.
What
I'm not
you
sure.
help?
Well, I think we need an Andy Warhol sort of experience to throw a few people into the crowd, and get them started. but we'll see. So I've got some questions, Alec. Just two on Berkshire, Aresta and from Aresta and Anthony. Aresta says, you've got no Berkshire in your portfolio, and Anthony says, is it not a good time to be buying some?
No, on both counts. We held Berkshire for a long time. I'm a huge fan of Warren Buffett's, again confirmed today. However, Berkshire is very old economy, and a lot of the assets that it holds, although it has got Apple, has got a huge benefit from Apple. Most of the rest of the assets are old economy. It's very big in insurance. It's also, the subsidiaries are in logistics. They're 85, I think, wholly owned subsidiaries, which is really the bulk of Berkshire. And it's not an exponential company. And what we've tried to do with this portfolio is to focus on those companies that are going to give exponential growth. Now, if I had a rand for every time that we've been told that these tech companies are overpriced, etc., then I think I'd be, well, I don't know, we'd be able to invest more into Biznews, put it that way. But what was very interesting, over the weekend, those of us who subscribe to the Arena company products, get as a as an add-on the Financial Times Weekender, and well, it's on my desk there, so I'm just going to turn around and get it out. There was a really good piece in the last weekend from the FT where it spoke about the top 100 beneficiaries of the pandemic, and market cap added. I'm just going to read the top ones. Market cap added by Amazon was number one, $400 billion. Number two, Microsoft. I'm sure you recognize those. Number three, Apple. They're all three in our portfolio. Tesla added 108 billion in market cap. Then Tencent, which we invest in as well through the Naspers holding. Facebook, which is a stock that we sold out at the time of the scandal there. Number 7, Nvidia, and many times in this portfolio we've been told that it's a stock we need to look at. 8 is Alphabet, 9 is PayPal, and 10 is T-Mobile. And as you go down the list, remember this is on market cap, you'll even find along there Adobe, which has done fantastic. It's number 17. It's a much smaller company than many of the others. But the point about this is that those companies, and we try to hold the majority of the stocks in our portfolio in those sectors that are going to benefit from the fourth industrial revolution or the transformation of society to a new world, a new era, which has been sparked by the internet and the way the internet makes the sharing of information and the business model so much different. Those are the companies that are succeeding and growing, whereas if you look at the S&P 500 index, many of the companies in that index are companies that are going the other way. So your philosophy in investing has to be to invest where opportunities are growing or where the companies are growing, because remember, you're a co-owner of a business. If you started a new business today, would you go and build a Sasol or would you build a Spotify? And that's the question I keep asking myself, and try and apply that. Berkshire Hathaway, unfortunately, is more like a Sasol than a Spotify.
Thanks, Alec. Steve's a question on Berkshire, but not in that line. He says, you earlier demonstrated that Buffett has returned 20% per annum since 65. Yet Berkshire's only improved by 1% since you first invested in it. Why the difference?
No, sorry. That is since we sold Berkshire. Let me just go back to that table again. When we sold, the point I was making there was that we had some, we sold some at the right time. There it is on the screen now. But we sold others. We only sold Berkshire on the 24th of March. We bought Berkshire in December 2014 at $150, $149.38. And we sold it on the 24th of March 2020 at 178.20. So you can see it's been because of the spectacular performance of the other stocks in the portfolio, it's been a laggard, a little bit of an anchor for us. But if you have a look at what Warren Buffett is talking about here, he's not talking about the share price. He's talking here about, there it is, about the growth in the per share market value. Oh, he is talking about the share. My apologies. In the per share market value of Berkshire. And in recent years, up 23%, 21%, 2%, and 11%. I guess that is, and then it was down, as you can see on the graph. I don't know if it's big enough for you to see, but in 2015, the share price was down by 12.5%. But that's really noise. When you are looking at Berkshire, you go back to the very beginning of 1965 and the brilliance of this man to have achieved it. And he says himself, he's been saying many times at those AGMs that I attended and the more recent ones that I've been to online. And it's a great way to spend a Saturday, or the first Saturday in May, or the last Saturday in April, depending on when Mother's Day falls. Because if Mother's Day falls on the last Saturday in April, then Buffett pushes his AGM to the first weekend in May. I mean, isn't that a nice touch? But anyway, it's a wonderful way to spend the Saturday afternoon. And he has been saying that size is an anchor to growth. And you must expect that a huge company like this, it's one of the top 10 market caps in the world, is going to have that difficulty given where its investments lie. and I'm talking about the subsidiaries rather than the portfolio investments, where he made the brilliant decision to buy into Apple. And of course, the fact that we had Apple in our portfolio emboldened us to hold on to that stock, even though at the time it was struggling a little in the share price.
Excellent, thanks, Alec. There's a few questions which we get every month. Is from Tessa this time. Is how do I buy into this portfolio?
Tessa, the portfolio is the model portfolio. So there is no actual portfolio. We used to do that once. We had it on easy equities, and the problem was it became so popular that we were soon faced with a bit of a dilemma, in that I had to either give up Biznews and become a money manager, which I don't think I'll be too good at, or continue to do what my passion is, which is Biznews. So we then gave the portfolio to the easy equities guys, and he said, well, you money managers, you run this portfolio into the future. We will just partner with Standard Bank in a model portfolio. So how this works is that if you would like to buy any of these shares, you have a look first at the proportion that we hold in the portfolio, and you can see there the percentages on the right-hand side, and then it gives you an understanding, first of all, about the risk that we attach to each of those, and then you can buy them through the Standard Bank Web Trader. So that's really what it's all about. Standard Bank Web Trader have been our sponsor of this portfolio from day one. In fact, the decision to create the portfolio was Brett Duncan's, who's the head of Standard Bank Online Share Trading. He said, why don't you start learning about international stocks, and while you learn, you can share your experiences with our client base. And as mentioned earlier, there are now 10,000 people who are active clients on Web Trader. So become 10,001.
Thanks, Adam. Dave just wants to know what you did with the Process and MultiChoice shares that was spun off from Naspers.
We sold them.
And then Gerard wants to know, do you know of a company called Afterpay? It's on the Australian Stock Exchange. He says it's well worth taking a look.
Thank you. I will look at it.
And just a question on the Sasol sale from Julian, Alec. Do you take into account capital gains tax?
No. This is a model portfolio, so I haven't looked at that at all. Obviously, you as a human being, you need to take that into account as well. But I still think that what we're trying to do here is to give you guidance on what you should be buying and not buying. So I guess you really need to consider that. And it's an important question, because what happened with Naspers, if you recall, with the investment into Process, it was all driven by capital gains tax decisions on that side. So yeah, good question and a good thought. This is not intended to be a portfolio that is precisely accurate in those regards. We just try and give you a feeling for how the portfolio has done over the period. I'm not going to turn this into a business. This is not our business. We tried. We tried, and we were successful. Unfortunately, too successful. So we're not doing that. But it really is a guide for you.
Thanks, Alec. Two questions on Spotify. I think you might have touched on it earlier, but from Des and Pritesh. Is it a good buy at these levels? Is it too late to buy Spotify?
Both of you, Des and Pritesh, what I would be doing is, if you like the story, and you decide to put $10,000 into the stock, then I would be buying $3,000 now, $3,000 next month, and $3,000 in August. So just split your purchases. It is possible that Spotify has been pushed a little hard by this day trading wave, but if you do that and buy it over a period of 3 months, the chances are less that you would get caught by something artificial in the share price. I think it's a phenomenal business. The way that they've refocused on podcasts is very similar to what Netflix did when they refocused, or not refocused, when they focused their attention on television or on movies. And essentially, where Spotify is sitting now is it is to be a beneficiary of the dramatic move. And we're seeing it in South Africa, just the advertisers haven't really caught on yet, but the dramatic move in consumption habits from linear, i.e. radio, to on-demand, i.e. podcasts. And around the world, it's been very similar to the way that you've seen network television moving to Netflix and Amazon Prime and Apple TV and of course YouTube. So, and it makes sense. Just think of it from a rational point of view. If I want to watch House of Cards, I don't want to wait until Wednesday at 9 o'clock to watch another episode. I would like to consume it on my demand, where it suits me, rather than when it suits the network TV station. Problem for a network TV station is that they just got to give it to you at that point. MultiChoice have been very, very clever in the way that they've got the combination together, but they also appreciate that, and that's why there was this excellent deal that they did with Amazon Prime and Netflix for the whole of Africa. They also appreciate that they cannot compete with their old model with the newcomers into the field. But that's television side. When you go into the audio side, Apple had it all to themselves. They had Apple iTunes. They had pretty much all the podcasts. And Spotify identified this as a new area, this switch from linear audio to on-demand audio, and is aggressively invested. They bought one of the bigger podcast companies called Gimlet in the United States. They acquired the rights to broadcast Joe Rogan, who's got the biggest podcast in the world. They paid $100 million for that. And they continue. In fact, they've just done a deal with Kim Kardashian for her podcast. And they didn't disclose how much they paid, but that's a big one. Also, they've done a deal with Marvel Comics in the last couple of days, where what will happen is that Marvel will actually put into audio their comics, so kids and older kids can listen to Superman, Batman, and all the rest of the superheroes. So Daniel Ek is a genius. He had his first business, I think, when he was 14, his first successful business. He was a millionaire before he was 20. And he typifies the best of the millennial business brains. And he's the guy who's driving Spotify and has promised he'll continue for the next 5 years at least. We don't know after that.
Dion just wants to know more about Cloudflare, Alec. He says it seems interesting, and with a small market cap, the long-term potential is clearly evident.
Yeah, Dion, it's a company that has a massive multiple, but it has a grip on that market. If you ask anybody in our field who has anybody who kind of wants to keep up to date with what's going on in the world in the digital arena, they will have their websites on WordPress and they'll be protected by Cloudflare. So it is really the gold standard for that field. And the margins are running at last 70%, 78%. They're growing at 30 to 40% per annum. And if you look at what the compound growth has done to this portfolio, you can just imagine if they continue at 30 to 40%, which there's every indication they will, then this is a company that in the future will be in a very strong position, given its dominance of its products right now. So if you believe that the internet is just going to get bigger and bigger and that security issues on the internet are going to become more intense, and there can be surely very strong arguments for that, then the way to play that long-term trend, exponential trend, is through through Cloudflare. So it's I like the company very much. I like the way that Matthew Prince has positioned it and the way it's going into the future. And I love their products. We use their products. We often, well, fortunately not too often, but we do from time to time have people who try and bring our website down. And the Cloudflare guys, the Cloudflare products are so strong. We did once have to drop a couple of stories but when I spoke to the Cloudflare guys, they were disappointed that we decided not to go to war, because it was a great opportunity for them in an attack that was costing hundreds of thousands of dollars by the rogues who wanted us to take stories down. So, you know, we've had personal experience of these guys, and often that's a really good indication of what a company is like.
Thanks, Alec. Luke wants to know, he says, to what extent is your stock picking approach based on a top-down fundamental analysis, and to what extent is it a bottoms-up analysis? And does technical analysis play any role?
No, yes, no. Not again. My heroes, Warren Buffett and his partner Charlie Munger, say, and if you read, I mean, Sir John Templeton, Fisher, a lot of these people who I've tried to learn from over the years say that the big stories are just too difficult to call. Buffett himself says that the big trends are, no one knows the future. Big Boss knows the future up there, but the rest of us are completely in the dark when it comes to that. So rather, when I invest in a company, I want to be a co-owner of that company, and I'd look at every investment that we make in that light. Sometimes the company that you want to be a co-owner of is a little expensive. It just costs too much, like in our day-to-day. Other times, companies you want to be a co-owner of are just screaming buys. And I was very happy to be a co-owner of Sasol at 27 Rand a share. At 140, not so sure anymore. So it is very much a bottom-up. In other words, looking at the companies themselves. It certainly wasn't a call on the oil price or on the chemical industry or on anything else with that purchase of Sasol. It was just it just got ridiculously cheap.
Just on there, I've got a few questions. I'm not sure if you know the Signia Fourth Industrial Revolution Fund, Alec. There's just a few want to know if you can have any thoughts on that.
Very, very good. Very good fund. Excellent. And it's, if you want to have a put your money away and forget about it approach, that's the one that would probably best be most closely mirror this portfolio in South Africa. It's got similar stocks, and they've got some interesting other plays as well, including their investment in the Oxford University fund, which owns the Oxford University vaccine attempt. So if that works out, the COVID-19 vaccine, if they get that right, they're not allowed to benefit during the pandemic, but after the pandemic, you can be pretty sure that we're all going to need COVID-19 vaccines going into the future. And if they can break the coronavirus code, which no one's managed to yet, remember, then that company is surely going to be set fair and might make the whole portfolio of the Fourth Industrial Revolution Fund look pretty cheap at the moment. Yeah, it's a nice one. It's a good idea that they put together. Both Magda Wazikja here and a guy I know quite well, and people in the financial services sector will know well, Andre Crawford Brunt. He's a South African who worked at Deutsche Bank here and eventually ended up heading Deutsche Bank's equity trading in New York for the whole world when they were one of the top players. He retired, and he spends his time doing interesting things like that, working with Magda. I don't know the full details of his involvement, but I could be pretty sure that he and Magda, who are close friends, would have worked together on this. So they know what they're doing.
Just a follow-up on Cloudflare from Simon Hunt, Alec. It's only 1% of the entire portfolio at the moment. Under what conditions do you increase it?
Yeah, it was an investment that was made because I was worried at the rating. If you look at it in any way, that rating, you've just got to say to yourself, this is a very, very expensive stock. But I guess at a point in time, Google, Amazon, Microsoft were all very, very expensive stocks. So it's not because of the risk, that is the risk of it falling. In other words, your margin for safety there is very small, and it is an out-and-out growth stock. So I'm just happy to have a little investment there in the portfolio, and we'll let it run.
Just a question on Zoom, Alec, from Jordan. Would you look at it in the futures due to the benefit of online meetings?
No. Zoom's got many issues. We use GoToWebinar, which has been around the longest. In fact, GoToWebinar is the gold standard of webinars. Zoom has become pretty much used by most people. I was a bit surprised because if you look at Google Calendar, it asks you if you'd like a Zoom meeting rather than a Google Hangout, which you can't understand why. But if Google were at some point in time to reverse that, then Zoom might not be as popular as it is at the moment. Zoom's got some very, very serious security issues. I heard of a recent webinar here in South Africa with a very high profile figure where guys jumped on, hacked it, and started showing porn. So that isn't to its advantage. It's grown very rapidly. The share price has really, really risen. I looked at it. Obviously, I looked at it. Everybody should be looking at Zoom as the potential. But maybe if we'd woken up 3 or 4 or 5 months ago, yeah. But at the current levels.
Thanks, Alec. It seems the hour seems to fly by, unfortunately. We've got so many questions, but there's one that ties into the medical theme. Michael wants to know, you're holding on to Discovery. What do you see in that stock going forward?
No, it's a phenomenon, Michael. There are very few world-class South African companies, but this is one. Just to let you, we've dealt with international companies, and to break in, to knock down the door, takes a lot of work, and it's very rare that the international company will be courting you. And if you have a look at Discovery, because of their unique shared value model, they have a massive global partnership with Apple. Now, Apple doesn't partner with just anybody. To get Apple on as a partner, you have to be something pretty special. When you have a look at their partners in various parts of the world, in fact, in their most recent trading update, it was interesting to see that their Chinese partner, Ping An, of which they own 25%, now makes up new business there was growing by 42% in the most recent period. And why would Ping An be a partner with Discovery? Because Discovery's got something unique. And what it has unique is the shared valued model, which it spent years and years and years perfecting. And it's now able to apply AIA in ASEAN, in Southeast Asia. It's got a partnership with John Hancock in the United States, Generali in Europe. It's really got some, and of course in the UK, what people who live in South Africa don't quite get is Vitality is a proper player in that market. And there are very few South African companies that have gone into international, taken their models into international markets, created their own subsidiaries there, and been successful. And yet Discovery is doing exactly that in the UK. So I like Discovery because of the management, which is unbeatable from a South African context. You get a smart young kid from one of the top schools in Johannesburg, they will always try first to work for either Discovery or Glencore, interestingly enough. And that's why you see so many South Africans in the Glencore stable. So it's they're a great company. And just to give you an idea, I did a podcast with the Discovery Invest, or the head of research and development, Craig Sher, this week, about a new product that they've put together for foreign investment for their clients in South Africa. So they've got partnerships with BlackRock, who are the biggest asset manager in the world. I promise you they don't do partnerships with everybody, and Goldman Sachs, which I think you all would know is one of the big names. So those are their partnerships, those two. And then because of the shared value model, if you invest in the portfolios that BlackRock and Goldman Sachs have, And if the rand is at 17.33 as it is today, because Discovery will give you back half the profit they make on the transaction, you buy in at 16 rand 20. And I mean, I couldn't believe it. I said, come on, this is, this sounds ridiculous. But that's the way the shared value model works, is that if they make whatever they make from you, they give it back to you. And if you think about that throughout the whole Discovery business model, making people healthier, trying to give you, to share with you the benefits that you achieve, the world we're going into, that's a fantastic model to have. So no, Discovery for me, we ain't going to be selling that one.
Thanks, Alec. I think we've come to the end now. I've just put that link to that interview with the Discovery guy if people want to listen to, because it is a fascinating concept that they've brought across their portfolio of products. So it's really interesting. But Alec, I think we can leave it there. Unfortunately, there's just too many questions to get through in an hour. So I'll try to pick up some of them post and see how we go.
First class. Well, look forward to being back in your company again in a month's time for this webinar. We've been doing a lot of webinars at Biznews now. We've got one tomorrow with Musime Mani, with our colleague Linda van Tilburg. And then every Monday and Thursday, we have our Noontime Thursday webinar that I host, which is the big story of the week. I am hoping that we can do something on Poppy this week. What's Poppy? It's the new Protection of Privacy Act. It doesn't sound like it's a big deal. Unfortunately, it is. It's a huge deal, and it affects all of us. It's been in gestation for many, many years, and I'm going to try and get the leading voice on that to tell us exactly how we're supposed to be changing our businesses. When they had something called GDPR in Europe, it transformed those businesses. They had to change completely their operating, or the way of operating. So let's see. I'm hoping that we'll have that on Thursday. But the whole idea of the Noontime Thursday webinar is that it focuses on the big story, or the big development of the week. And we try and unpack that so that you can understand. And of course, you also get interaction there as well. And then, of course, on Mondays, there's the Rational Radio with David Shapiro and our other guests. And there we focus completely on investment. So we have those as our webinars. We also have one on a Friday, Finance Friday, with our editor of Biznews, Jackie Cameron. So we really got as many webinars as you'd like. We are delighted to be able to do this, because we think it's one of the best ways of communicating and serving our community, and that's actually what we're here for in your service. Thank you.
Excellent, thanks, Alec. And if you've missed or want to repeat the webinar, the YouTube channel link is on the chat bar, and we put all our webinars on the YouTube channel. So if you subscribe to that, you'll get a notification of any ones you might miss. But that's it from my side. And thanks again, Alec, and we'll chat soon.
Indeed. Cheerio.